streaming now.
All right, I'm just watching to see if we come up on the.
Okay. All right, you got it. Yeah, I do. All right, we are going with the music. Good morning. Let's get started with Tom Gentile in 5, 4, 3, 2.
Hey, everybody, Tom Gentile. Welcome to Monday morning, November 15th, 2021. Ryan, it's cold here today.
Yeah, it's a little chilly here, too.
It was in the 50s. I had to throw on my New York sweatshirt here. So I'm going to be Dr. Doom today. Actually, there's nothing to be doomy and gloomy about. The money calendar is looking really good. We're going to talk about that. We're going to talk about, gosh, what else do I got on this screen? Got to talk about my winning trade. We got to talk about the overall market. So I'm going to look at stocks, bonds, currencies, commodities. We'll take a look at those. Also, I want to welcome my YouTube channel. Who's here today? We are simulcasting. We're actually simulcasting in both the Money Morning Live Room and at Tom's Trading Room on the YouTube channel. So welcome all of you YouTubers. And I will be handling some comments on both sides, on both channels. So feel free to type in. You have questions or comments. I'll get to those a couple of times during the course of the hour. I also got, for my microcurrency traders, I got a pick coming out later this morning. And we've got a new coin that we're going to be getting to later in the day. I wanted to make sure that all of you that are microcurrency traders be on the lookout for that coin. What's cheap and what's expensive? We got a lot to cover here in the next hour, so I want to go ahead and get started. Let's start with winning. All right, winning meaning the trade that I discussed early this morning on Monday Morning Live. Well, it wasn't that long ago. But now that we've hit the opening bell, we're going to take a look at that trade in detail, and we'll take a look at the spread, the option trade I talked about as well. We are going to plan it. We are going to show you how to execute it. I am going to show you how to manage that trade and much, much more. We'll talk about that, going from all of a sudden, why did we come up with this, to how do we pick the spread, to how do you actually place the order with your broker, all right? So that's where we're going to talk. What we're going to talk about for the first part of the session today. So once again, I want to welcome everybody who's hanging out. Hey, sorry for that little glitch we had this morning. I'm sitting there just chatting away, and I'm waiting for a response. And I'm like, hello, is anybody here? Anyway, all good because we're going to go over that trade in its entirety right now, guys. So here's what I am looking at in terms of win. We talked about the trade in WYNN earlier this morning. I want to bring up the why for it. Why does this trade look so attractive? And the reason this trade looks so attractive is because it's the basis of something I call the money calendar. Now, the money calendar is a piece of tech, a large piece of tech on my software that helps me go back and look at 20 years of data, 10, 20 years of data, and be able to quickly get an idea if whether or not there is a seasonal pattern in that data. So we look at millions of data points and we try to determine what is the best day to buy and what is the best day to sell any particular security. And what happens is the ones that repeat themselves over and over again, well, they go to the top, and then we're able to take a look at those and get more of a determination of whether something like that makes sense as far as the actual stock itself. So that's what I want to cover with you first this morning. So what you're looking at on the screen right now is my 10-year pattern on Wynn casinos or Wynn Resorts. And so the pattern we see here starts today, all right? Starts today. And what's happened here is this one has gone from, it goes from November 15th to November 30th. Now, we take a look and see whether this pattern makes sense going forward today. I mean, I look at it over the weekend. So I'm looking at it over the weekend, and I'm looking at Friday's closing prices. What we're going to do is we're going to look at this based on those closing prices. Then we're going to look at it as to where it is today and see if we need to make an adjustment. It's that simple, okay? So left-hand side of the screen above my mark, and I'm going to give you a better idea of exactly what I'm looking at here because here we go. This particular part right here is the 10-year back test. So going all the way back to 2011, what I see here is I see how did this pattern perform during these last 2 weeks of November in 2011, in 2012, 13, 14, 15, 16, 17, 18, 19, 20. And as you can see here, a couple of things stick out. It should stick out to you. It certainly sticks out to me. The losing year was 2014, where it dropped by a little more than $5. The biggest winning year was 2016, when we saw this pattern jump almost 17 points within that time frame. Last 5 years, looking really good. In fact, we're sitting around average of about 7.5 points in the last 5 years. And it's important to note that because Wynn Resorts is not trading today where it was 10 years ago. Hence, it's more valuable as a stock. So I want to be focusing in on what it's done lately. Even though the average takes the winners, losers, and throws them all together, again, like many of us in the room, we always ask, what have you done for me lately? I ask my patterns that. What have you done for me lately? What has this stock done in the last 2 weeks of November over the last 3, 4, 5 years? And we're talking about, guys, we're talking about something that's moved up an average of about 7 to 8 points. On a factor that into our analysis. Next, here's what it did last year. Was trading around 80, let's call it 87, and ran up all the way up into around the 103 area. So a nice big fat return there. Moved up very nicely here within that time frame last year. And that pattern last year started on the 12th and ran to the 30th. Again, these patterns flex back and forth each year. What is the best particular time frame? Okay, the computer, AI, artificial intelligence. My artificial intelligence tells me that this 2 weeks coming up now that ends on November 30th is the sweet spot for trading WYNN. And we talked about that you could buy the stock. That's easy enough. But how about an option trade? So what we were looking at on the stock, first of all, was here was the stock price coming into today, right? A few months ago, in fact, end of June, was trading above 125. Dropped all the way down, had a little bit of a pop back, then it dropped back down. The lows came in below 80. Now, we're currently trading back up here around the 94, 95 area as of the Friday close. So when I look at this, it literally is in the same spot it was in just pattern last year. What's going on now that's making this move higher? Well, we've come off of a very significant bottom, number one. Number two, we're getting lower highs and lower lows since the middle of September. Number three, the earnings report that came out was a miss, but it was expected as a miss, and therefore you didn't see this huge sell-off on WYNN the days after. Number four, and I think this is the most important part, we're heading into a seasonal pattern here, all right? Seasonally, people tend to go to these resorts as we go into the holidays. And especially this year, now that there's some folks that have a little bit more ka-ching in their pockets and they want to spend it. And that's what we're looking for to happen once again, as it has 9 of the last 10 years for WYNN. Buy the stock? Yeah, we could buy the stock, get maybe a 6% upside return. What about the options? So Friday, the options look like this. Now, what I did was in my software, I just expanded it and I snapped the part that's most important to take a look at. I have in, well, that's supposed to be green, but it looks like it's aquamarine color. I've got the aquamarine color showing the December 3rd, 2021 95 calls. Again, 95 calls expire Friday, December 3rd. They traded and closed Friday right in the middle point at $3.45. And so we're looking at something that if you could have got the midpoint on that, based on that price, you're paying $345 for the option. Now, if we're expecting this to only go up 5 points, 6 points, okay, 5, 6 points, then what we're talking about is a $3.45 option that would have a minimum value of 5 points if we could get to 100. Okay, so we're projecting, our projections are a 6-point move. So 6-point move means that we're going to go from that 94 area to 100. So what is the 95 call worth at 100? 95 call worth at 100 is worth $5. If you paid $3.45 for this, then you theoretically, if we are at 100 on December 3rd, theoretically you got something that's worth $5. If you paid $3.45 for it, you have $1.55 in profit. What's that come out to be? 40% maybe? All right. That's why I looked at the spread. Now, a spread involves buying the lower strike. I'm circling it now. And selling a higher strike to help pay for the lower strike. So if I'm buying this and I'm paying $3.45 and I'm selling down here and I'm able to sell this for $1.88, this actually comes out to be really around $3.60 $1.60. So instead of paying $3.45 for the middle, you could buy the spread, buy the 95, sell the 100s, and that reduces your price down to $1.60, all right, which is less than half of what just paying for the 95 calls would cost you. So let's do a quick rewind. A, we look at a pattern. The pattern is in Wynn Resorts between now and the end of the month. B, we look for an acceptable risk option trade. In this case, I'm looking at not just buying the calls, but buying the call spread to reduce that risk. And then C, it's just a matter of setting that trade up. And again, setting your trade up, planning it, executing it, and managing it if you feel, and I say you, insert your first name here, feel that this makes sense. Again, I'm not your broker. I'm not your investment advisor. I'm here to educate you how it is that I trade these markets. And right now, we're talking about the money counter and trading as a pattern trader. Now, do I have 100% success? Am I the trading god? Am I the guy that's, always right? No, I'm not always right. Okay. I take losses. This is a business. Talked about this last week, guys. If you're in the retail establishment, you're going to have losses going out the front door by means of running with your items, or maybe it's going out the back door in means of trash, especially if it's produce that, overstayed its welcome in your store. Maybe it wasn't brought in the back door correctly. Maybe it was dropped on the way in. What I'm talking about is something called slippage, right? Which equals losses. In the trading world, the same thing. The most important thing to do is to potentially have your winners and have your winning trades outpace your losing trades. That's what keeps you consistent in this business. All right. Z-Man, you're asking about how we go over how we make money on the call spread and where we want it to finish. Fantastic question. I'm using your question for the basis of what I want to discuss next. So let's go ahead and get there. Now, what Z-Man's saying is, can you show me what this thing actually looks like and how we make money? So I talked about the stock and option table. So let's go to the risk graph. Here's the risk graph. Let me break this down for you. All right. Here's the Wynn Resorts trade. And what we know is that mid-price, it's coming in at $1.57 or $157. Now, when I say $1.57, I'm talking about taking the actual option we buy and subtracting the price from the option we sell. So example, option we buy is mid-priced at $3.45. Well, it was on Friday. Okay. Option we sell mid-priced at $1.88. Okay, so $3.45 minus $1.88 is $1.57. You can take $1.57, multiply it times 100. That's what you're paying for the spread, $157. That's our cost. That's also our maximum risk on the trade. Now, what's my reward? My reward is this. You're going to take the difference between these two strikes. So what's 100 minus 95? 5. If you paid $1.57 for something that's worth 5, that can be worth a maximum of 5, the distance between strikes, that's the most you're going to make on the spread. The most you make on any spread is the distance between its strikes. What we do is we subtract what we paid for that strike, what we paid for that spread. So if I have a $500 maximum reward on a spread and I paid $1.57, the most I'm going to get on it is $343. Where does this need to be in order for me to get the maximum return? It needs to be above 100. It needs to be at or above 100 on December 3rd. Okay? So when you take a look at the trade, you can see here, okay, above 100, December 3rd. And then the other thing that we want to ask ourselves is, again, what if I'm wrong? Well, I lose $1.57. And I'm using this example. What if I'm right? Then if I'm really right, I can make $343. And what do I need to do? Nothing. Because on December 3rd, if this trade, if Wynn Resorts is trading above 100, you could simply let this whole thing expire. What's going to happen is you're going to automatically get exercised on the stock. You're going to be long the stock at 95, but wait, there's more. You're going to also be short the stock at 100. Now, what happens when you're long and short the stock at the same price? What happens? I'll tell you what happens. What happens is that you are now the recipient of the 5 points. You're long and you're short. The short stock carries away the long stock. You get the 5-point credit, the $500. Again, remember, you paid $1.57 for this. So what's left over is profit. Now, last question coming. What's my break even? My break even here shows $96.57. Well, where does it come up with that? Think about this. You take the $1.57, all right, and you add that to the call strike you bought. So what's 95 plus $1.57? 96.57. Again, all of these numbers I just told you about are based on where the stock ends up on December 3rd. Anything before that, and we've got to start creating what-if scenarios. And a what-if scenario is what we do right below this. So this is the risk graph right here for the Wynn Resorts call spread trade. The left-hand side, everybody should know what that is. That's the price chart of Wynn. The right-hand side, you might not know what this is. What this is this is your risk graph on the 95-100 call. So what's over here? Maximum loss, no matter how far Wynn Resorts drops. Okay, no matter how far it drops, you can only lose what you put into the spread. I mean, even if Wynn goes down to 75, if you paid $1.57 for the spread, that's the most you can lose. On the upside, if Wynn goes back up and gets above 100, okay, then what you see over here on the right-hand side of the screen is the maximum upside. No matter how far above 100 it gets, all you can make is the maximum distance between strikes minus what you paid. In this case, $343. The colored lines in the middle, red, blue, green, these are scenarios where my software takes a look at what these prices theoretically should be worth based on a number of factors, being stock price, how much time you have to expiration, what the strikes are, what the interest rate is, what volatility is, etc. Puts all that together and gives us what if scenarios. Very similar to the way that our insurance is created. Okay, so you ever wonder how your premiums are or why they are the way they are with car insurance? Well, you take into account your age, all right, your driving record, the car you're driving, how much you're going to have as a deductible, and how long the policy is going to be. Guess what we just did? We just came up with car insurance, and we plug all those numbers in. The insurance gods will give us a quote. Well, that's exactly what we're doing right here when it comes to options, guys. I don't want to make this all I could throw the Black-Scholes options pricing model up, or the quadratic pricing model, or whatever model that you use. Or we could just simply say, based on the computer's model, this is what this policy, so to speak, this 95-100 call spread policy is worth at any given price and at any given time up to expiration. That's it. That's how this whole thing's put together. All right. So last part of the equation is we have looked at our trade. We have looked at our pattern. We've now ready to place the order. And to place the order means that we have to go and now look at our favorite brokerage platform, which I need to log into. So I'm doing that right now as we speak. This is the part where you have to now decide who works best for you. I'm not someone out that's going to endorse brokers. Okay. What I believe is that you find the broker that best fits you, that best fits your trading personality. A lot of brokerage platforms out there. Out of them all, some are more full service, some are more geared toward customer service, and then there are some that are right in the middle. All right, so I'm going to move over. We're going to look at one of my platforms, and one of the ones I use is Street Smart Edge or Street Smart Central. As you can see here, I've loaded up the all-in-one trade ticket. Now, I want to tell you guys something really important right now, okay? This is something that you do occasionally hear from me, and it's important you know this. I do not trade the 9:30 bell, okay? In fact, the earliest that I trade is maybe 9:32, but typically I don't trade for the first 5 minutes. Does anybody in here that's sitting in the chat room have any idea why I wait until a couple minutes after 9:30 before I put any of my trades in? Angie, you're going to find out right now if you're definitely new. My option trade for Wynn cost $5. How did you buy it for under $2? Well, I haven't bought it yet. I cannot go in and buy options before the market's open. And I'm definitely not going to buy them on Friday and tell you to buy them on Monday. Okay? That's ethically wrong. But too much churn, erratic fills, correct. Absolutely correct, guys. Those are the reasons that we do not go in and buy these things ahead of time. All right? Fantastic. YouTubers, I'm looking at you too. Is it John? I'm doing a live trade. I'm going to do one for you right now. So take a look at this. So we're going to type in WYNN. I will not put this in ahead of you. Won't do it. All right? But I'm going to show you how I set these up. So could buy the stock. Right now it's 94.75 by 94.87. That's the bid and the offer on Wynn stock. Right? So let's take a look at what's the call spread or the call going for. So if I were to look at again, the December 3rd, 95 call, well, there's no way that's trading for $5. All right. So someone in here was saying they got filled for $5 on the option. It wasn't the option that I was looking at. So that's something that we'll look at. But still, 365 by 390. It is a little more expensive. It is a little more expensive than what it went out for on Friday. So what I was referring to is a call spread. Now let me show you a call spread. So the call spread looks like this. We're looking at the, again, December 3rd. Let's plug in the options correctly. 95 on the buy side, 100 on the sell side. What's that going for right now? 165 by 214. So it has gone up in value. It's gone up in value. All right. Now, I like trades that give me the opportunity to double my money and then some. So let's do another. Let me put another question to the court here. So, question to the court is this: can I put this trade on at $2 and still have the ability to double my money and then some? How many of you in here believe that is still the case? Blue says yes. Ken says no. Wiggy says yes. Mark says yes. There's a no. There's a couple of yeses in here. Let's see what the YouTubers are saying. YouTubers. My YouTubers are saying yes as well. Jeff's saying yes. So they're there. You could, and so I got some no's, mostly yeses. The answer is yes. Let me go through the math with you one more time. If I buy this spread for $2, let's say I go in and I'm looking at that 168 by 229, and I'm going to put this in for a limit of 2. That's a debit. See that limit debit? That means I'm paying 2 for something that could be worth 5. All right. Now, last time that my feeble brain recalled, if we get to 4, then 2 is a double. So for those of you that said yes, you are correct. All right. And member 000041466189, kinda right. Okay. I'm going to help you here. The $2 risk is not a $5 win. The $2 risk, you take that 2 off the 5, which is the maximum it can get. So the $2 risk could become a $3 win. I believe that might be what you could, what we're talking about here, guys. Okay. Right. VW is in there, typing it in exactly like I am calling it out. Very good. So $200 could make $300. So this goes in, and this would go in as a limit order. And then now let's finish this up. I mean, I'm going to put 3 more minutes to this, and then we're moving on. So here you go. We have looked at the opportunity, spotted the opportunity, created the alternative risk trade. We have planned the trade. Have we executed the trade yet? No, I got to hit the button to do that. Okay. But let's just say the trade has been executed. Now, what's the last part of this whole equation? Starts with an M. Manage. We want to manage the trade. So when I go in here and I place this trade and I get filled on this trade, now, first of all, if I did this, if I had a minimum of 2 contracts in here, you know what I'm going to do? Life's easy as got it. We want to make the sell position one. And I like to sell half of my trade if it doubles in value. All right. So you guys know my rules. All right. If it's an ETF, I get out of half of it, goes up 50%. If it's a stock, I get out of half of the trade of my option trade if it goes up by 100%. So this is how I'd set it up. I would sell to close what I was buying. I would buy to close what I was selling. I would do at least half. So if I bought 2, I'd be selling at least one of these, maybe 2. And I would do that here. Now, this is going to become a credit because remember, when you open a vertical call spread, which is this, all right, when you open a bull call spread, if I'm buying the spread, I'm opening the spread as a buy to open, sell to open, buy to open what I'm buying, sell to open what I'm selling. You're just simply reversing the order. And I'm going to sell to close what I bought. I'm going to buy to close what I sold. And I'm going to do that at a credit because I want to take that money back. And I'm going to do it for a credit of 4. If I paid 2 for something, and I'm going to set this up as a good till canceled. Because what that does for me is that's that fire and forget strategy. All right. I'm in. I want to be out. Am I going to get $4 today? No, probably not. Wynn's going to have to go up significantly today for me to take a $2 spread, turn it into a $4 spread. But I have it set as a good till close. So if And when it happens, I don't have to be sitting in front of the computer watching this thing so long. All right. So there you go. Also, the question a lot of people have with spreads is, hey, how come this thing went to, say later this week, Wynn goes to 99, and all of a sudden you're thinking, I'm getting my $4. I'm getting it. Ooh, might not happen. All right, and I'm going to show you why. Because you come back over to that trade. Here's the trade. Now, let's just look at this and say, all right, well, what happens in a week? Well, in a week, I could go to this blue line, because you see right here, guys, where it says, let me get in here real close. Let's tighten that up. See where that says 21 days to expiration? All right, that was based on Friday. But look at this 14 days. That's 11/19. That's about a week later. So we're going to use the blue line. I want to show you what happens on the blue line if we get to 99. All right, so 99 is right here on the graph. See that, 99? I'm going to come all the way over. I'm going to put my red arrow, that big red arrow, on the blue line. What is it telling me? It's telling me that I've only managed to get about this 2 has become 3. It's not become 4. Why? Because in a week, we still got 2 weeks of time value left on this trade. And because in a week, there's still people that are buying and selling this, and therefore, it's not going to go to straight up intrinsic value. There's still going to be time value left in the options you sold, as well as maybe a little bit left in the option you buy. All right. So in order for next week, this thing to be worth 4, guess what happens? You're going to have to go up a good bit more. All right. And what I see is that we would need to go up to, guess where? About $103 would have to happen. We'd have to really pull up to 103 for both the call and the put, the call that you bought and the call that you sold, to be equal to $4. That's time value. We also call that a risk profile. Shar is setting that right now. She's talking about that risk profile. I'm showing it to you on my tools right here, tomsoptiontools.com. Right. So that's it. I'm out of time on this one, but I just want to talk a little bit more again about how we spot opportunity, create that alternative risk trade, and then plan, execute, and manage the trade. Okay. For those of you just joining me over on YouTube, we're going live 3 days a week now on our YouTube channel and simulcasting right here at Monday Morning Live. So I want to welcome all of you that are with us on YouTube. Let's get into my next topic. All right. So Ryan, I think it's time we switch gears. And I want to talk about the money calendar. So the money calendar is where we're really kind of get these ideas. All right. I look at the money calendar every Monday morning, and we take a look at this thing. We take a look at the month. And so upon the month, let me just set this up. It looks like a calendar, guys. And this morning I was talking about how it's scoring. All right. So I'm looking at the overall month, going all the way into the Friday after Thanksgiving. This thing literally looks green all the way across the board for the month. When I go into it a little bit deeper, what I see is each day has 3 different unique areas that are important to me. So let's look at the 15th today. So I see that out of the 4,000 optionable stocks, there are 144 today that have patterns that need my attention. And the patterns we're talking about is that in the last 10 years, 144 stocks have had 90% or better patterns that are starting today. Now, 141 of them are bullish and 3 are bearish. That means that 141 of these stocks, 9 in the last 10 years, have gone up between today and the end of their pattern. And 3 have gone down between today and the end of their pattern. So what are these stocks? What are their patterns? And how do I sort them? That's where I go next. So I'm going to go in here and I'm going to look. And I got a lot of green on the screen. Now, you know what I'm going to do first? Because I'm seeing some of you in here, and I'm going to go ahead and look and see if there are symbols right now that are telling me that there may be a bullish or bearishness to the pattern. I saw someone saying, Starbucks. Let's go down, and I've got it ranked by symbols. So is Starbucks in that pattern? Well, the only way we're going to find out is look right here. Starbucks is in the pattern. Says the next 15 days are bullish. Okay? And so that's one that I would take a look at. Let me look at the YouTube channel. How about GM? Let's take a look and see what's going on with GM. Kim wants to look at GM. So is GM on the pattern? Back up to the G's. This is the way I do this. First off is just see if there's anything out there that looks interesting. And is it one of the stocks that I follow? So is GM on the list? No, GM's not on the list. So that's something to keep in mind. I'll take a look at one more. Let's take a look at SPY because Gervason is saying, let's look at SPY. Is it on the screen? Come on down. And yes, it is. Look at SPY. Look at that green. Look at that long line going all the way out to 30 days. 30-day pattern starting today. So today to mid-December. Guys, who is with me here the last couple? Who in the chat right now? All right, whether you're on YouTube or whether you're on Monday Morning Live, who's been with me for the last couple weeks and heard me talk about DIA and heard me talk about SPY and heard me talk about QQQ and went through all these bullish patterns week after week after week? You know where I get them? Me, Shar. You know where I'm getting them? Right here. Right there. That's where I get these. Yes, I do get ETFs as well. I put these together. We call them haystack trades. All right. Why trade the needle when you can trade the haystack? And so I put the haystack trades out the last couple weeks. But today, I want to do a little bit of sifting because guess what? Wynn is not the best trade today. It's a good one. It's not the best one based on what the money calendar is telling me. I'm going to show you the top stocks. To do that, we don't rank them by symbol. This is alphabetically, right? As you can see, the symbols, I get the symbol, I got the duration of the trade. You can see that there. I then also get information like net profit, accuracy over the last 10 years, average profit, when is the ending date of the pattern? That's kind of important, isn't it? Because that's when you want to get out. When was the last loser, all right? How many years ago did this thing lose money? And then finally, where it ranks on something I call power meter. Power meter is important because what the power meter tells me is the more positive that number is, the better the trend, the better it's been doing lately in the pattern. Guess where I like to rank these? I like to rank them by power meter. So let's not look at the negatives. Let's look at the most positive. I got a couple 391, 393, 296, 232, and 225. We got a lot of twos and threes on the board. Let's find out what those are. There's some FAANG on the screen. Amazon, 11-day pattern, starts today. Google, 21-day pattern, starts today. BlackRock, 18-day pattern, starts today. Boeing. You know, I sold puts on Boeing last week on this pattern. Last week, week before, because the same thing I'm seeing. I'm seeing that I'm seeing bullishness coming in. I'm going to tell you if I see something on the screen and I'm involved in it right now, I've got some sort of position on it, I'm going to disclose. I'm going to disclose that I'm in Amazon right now. I'm going to disclose that I'm in Google right now. I'm going to disclose that I'm in Boeing right now. I'm going to disclose that I'm going to be looking at something in BlackRock and Autodesk. But these are where we pull the patterns from, folks, right here. So you want my top 5 coming into the week? Amazon, Google, BlackRock, Boeing, Autodesk, all based on patterns starting today. So, will crypto crash if the market crashes? I'm going to get to that. Dennis. How do you choose the right option? That's a question. Now, that's the question. Anybody ever watch iRobot? You know, where Will Smith is asking the hologram the questions, and he says, my syntax will not allow me to answer that question. Something like that. I don't remember exactly what he says. And then someone asks him the question he wants to hear. He goes, that is the right question. He never answers them, but he goes, that is the right question. Well, when I look at what Consuelo says, that is the right question. I'm going to answer that for you right now, too. This is the easiest strategy for option traders. Do you know why? It's the easiest strategy because of a couple of reasons. All right. If you're using moving averages, or you're using stochastics, or you're using Bollinger Bands, or you're using VWAP, okay, all of these give you good price targets. You know, if you're using Bollinger Bands, you got the top band. You know, if you're forecasting higher, if you're using stochastics, or you're using something like RSI, those are a little bit harder to get some sort of an idea of price. Fibonacci extensions, great price targets. VWAP, great price targets when you put the bands on. What about time? None of these ever give you a time target. Do you know why? I'll tell you why. Because they're only price target sensitive. That's it. You cannot get a time target on a moving average. You cannot get a time target on the majority. Almost every single indicator out there will not give you a time target. Right? Carl, the calendar is called the money calendar, and you can see it here every Monday as I bring up seasonality. Again, where can you find time targets? I think I'm just trying to think of a few. Fibonacci time is one way of looking at time targets. Maybe the Gann loop that loops out, you can set that ahead of time and maybe create a time target there. But very, very few indicators give you an idea for time. This one does. This one gives you a time target. Let's take a look at Amazon, for instance. Amazon, 11 days. That means that the pattern's over in 11 days. So what's your time target? 11 trading days from today. If I go to Amazon, look, buy it November 15th. The pattern ends on November 29th. There you go. There's Amazon's time target. Let's go back to the day. And by the way, here's my day. That's my calendar. Here's my power. There's Amazon. Let's look at Google. There's Google. Today, the pattern starts, and on December 13th, the pattern ends. Time target. Seasonality. I've done all the homework. Tells me the best time this pattern ends based on everything we've seen in the past is, again, there. And for Google, it is December 13th. So when I look at all this and put this together, what I'm doing is I'm simply using both the element of time and the element of price. Now, we talked about time. Time's easy to see on here. It's 11 trading days from now. It's 21 trading days from now. It's 18 trading days for BlackRock. It's 14 trading days from now for Boeing. It's 17 trading days from now for Autodesk. Okay, that's your time. What do you do with that? Well, what I do is I always look to find options that expire around that time frame. That's the way I'm picking the Goldilocks option. Right? So when I'm looking at Google, maybe the December 17th options make the most sense. For Amazon, the December 3rd options make the most sense. Why? Because those are the options that expire just after the pattern. Just after the pattern. And sometimes just before. I try to find that option that expires as close to that pattern as possible. So that's the time target. Easy peasy. What about price? Well, how far is Google set to go? Again, it's all about measurements. And with Google, let's take a look at it. So Google, I see the trade length, but down here, this is where I get the idea where Google's going. You see that number right there? Average trade goes up 19.98. Could we call that 20? $20 higher, all right? And I come down here and I say, wow, 2014 was not a good year. But look at these last 5 years. 43, 13, 18, 55, 32. Hut! Didn't mean to throw that in there. But if you take a look here, you can see that easily the last 5 years have gone up an average of about 30 points. What we do is we take that average number. In this case, looking at those last 5 years is 30. I'm going to take 30. I'm going to add it to the price of Google today. Today plus 30 equals target. Okay? Today plus 30 equals target. And now what do? I simply look at that today and target, and I come up with an option trade in between. And with Google, I'm more than likely going to be buying a spread if I'm going to be on the buy side of this trade. So I will buy something closer to today, and I will sell something closer to target. And that's how I create these bull call spreads. That's it, guys. It's not rocket science. Okay? So I wanted to show you very quickly what the money calendar looks like, and as well as the other stocks I'm looking at. Now, let's move into options. And so for the next 10 minutes, Ryan, can you throw 10 minutes on the clock, please?
You got it.
MCLDR. Glad to have you as one of our members to Money Calendar. Where's my YouTubers at? YouTubers, what makes you different than other traders? I don't know. What makes you different than other folks watching this program? Let's see. Been in the business for over half my life. All right. Came off the American Stock Exchange. The time frames are a little bit different. I think the average time that the firm that I was working with held a trade for about 20 seconds. Moved that back. Optionetics. Me and my partners helped build that company. That company was one of the biggest options education companies in the world. That we ended up being acquired by an option brokerage firm, which then was acquired by Charles Schwab, was a managing director at Charles Schwab for a few years. Then I pulled back, started my own boutique educational firm again, and also am picked up by publishers like this one. So I don't know. Also, maybe the fact that I trade. Also, maybe the fact that I have a fairly decent size account. I don't know what you'd call decent size. I think I have a pretty decent size account. Cryptocurrency. Mined it back in 2013. Maybe that was a little bit luck. That was a little bit Son who kept bugging me to mine because he said you can learn more about cryptocurrency if you mine it, and you'll understand wallets real quick, because if you don't understand wallets, you're going to lose your crypto. So I understood wallets real quick. I mined back in 2013. I bought Ethereum in 2014, also several other years, even several other months, and even just last couple weeks ago, Ethereum. I put six-figure investments into Ethereum. I have six-figure investments in other cryptocurrencies, which are now 10. I've got a couple 10x trades. So I like to think that makes me different. And the fact that I sit here and do this with those of you here, I think many of you know I don't have to do this. I actually like doing it. So that's what makes me different. That's what makes me different. All right, enough of that. So I got some clock here. I got to get it moving here. But hey, that's a good question. People ask that all the time. So why not bring that up? And cool. I think I said that right. I took classes with Optionetics with you and George 15 years ago. Way to go. God bless George. He went way too soon before his time. I don't think there's a day goes by I don't think about George and what we could be doing together. Okay, let's move on. I want to look at what's cheap and expensive. So here's something else I think that separates me from a lot of the other folks out there when you ask what makes me different. I have a set of tools. All right, I have a set of tools. I'm not a thinker. All right, Giaz, I'm not a thinker. I don't think something's going up or think it's going down. I'm a robot, okay? And as a robot, I want to trade rules-based trading. I want to trade objectively. Objectively means looking at patterns. Objectively means looking at options. What you're looking at on my screen right now are the top 10 most expensive options out there. I will never, ever, ever, ever buy call options or put options on these stocks. You know why? Because it's like going into, Saks. Okay, Saks Fifth Avenue. You see a shirt at Saks Fifth Avenue, and you see the same shirt at the outlet store, the Saks outlet. It's called Saks off Fifth. Same exact shirt. Only difference is they have completely different prices. The one on Fifth is selling for $500. The one off Fifth is selling for $50. Which one are you going to buy? All right. Well, that's what I look at here. Expensive IV is the Saks Fifth Avenue of expensive options premium. Typically, it's because they got earnings coming out real soon. Let's take a look at a couple of them here. So, Xilinx. Now, here's what you're going to see from your platform. You're going to see that candlestick chart just like I have here, and you're going to see Xilinx moving up, and Xilinx has had a nice move. 150 back in October, right? Moving all the way up into above 200 and above 210. But and notice here, two things are happening with options right now that I see. Number one, they're either going into earnings, or number two, they're going into something called melt up. And that's what's going on with Xilinx right now, and a lot of other stocks, melt up, okay? So Xilinx had their earnings come out, had good earnings. Look what happened. Now, this black line, this isn't something you're going to see at any particular software. In fact, what we do is we measure all the 7 to 149-day options. We get a measurement of them, how cheap or expensive they are. We put those together, and that creates an option graph for us. And this is time premium. See where the option graph was just a couple weeks ago? Trading down here near a 45. Now the option graph is above 65. It tells us those options are much more expensive now than they were even just 2 weeks ago. That's what that tells us. And in this case, I don't want to be buying call options if I think Xilinx is going higher. Call spread would make sense here because at least you'd be selling something that's expensive to help kind of negate the time premium that you'd be buying. All right, if I were to kind of come down a little bit more, let's take a look at NVIDIA down here at the bottom. It's at the bottom 10. NVIDIA. Now, NVIDIA's got earnings coming up in 5 days. That might be exactly why these options are so expensive, because you got traders that are buying calls. You also have traders that are buying puts. All right. You know, do you know that traders that buy calls and traders that sell calls on NVIDIA may both be bullish? Here's a trick question for those of you that want to try to answer it. How could I be trading calls or buying calls and selling calls? How can I be buying calls, one trader be buying call options, and one trader be selling the exact same call option and be bullish, both being bullish on the same stock? How can that be? Curious to see what kind of answers we get here from both the Monday Morning Live crew and the YouTube crew. Has to be the same exact option, so it can't be a spread. Has to be exact same option that expires the exact same day. Tony got it right. So did the member. The member got it right too. Frank K got it right. All right. And several of you others got it right too. Awesome. You guys got that thing right. Okay. So, covered calls. Because the person selling a call that, let's say I decided to buy a call option and someone's selling the same call I'm buying, they could be selling it because they own stock and they're selling premium against the call they own, and maybe they're hedging it, but they're both bullish. That's how you can see a buyer and a seller. And don't think that if somebody's selling something you're buying, don't think they're trading opposite of you. They may be trading that exact opposite of you, but their risk graph could be similar. They could have a bullish trade on too. They might be just making it less bullish. So great comments there, guys. All right. NVIDIA is crashing. What to do? I never bought NVIDIA. So in this case, I'm sitting here watching it, waiting and waiting and waiting for the perfect opportunity. Now, NVIDIA in here, now, I'm not a buy and hold on NVIDIA, okay? Maybe I should have been. This is not one of my buy and holds. But is there a trading opportunity here? I don't see one right away, but there could be one coming up real soon. And you know what? I'm looking at implied volatility. I might look for something to sell here in NVIDIA. So there we go. All right. And I'm down to a minute 30 on the clock. So let's take that minute 30. Let's share it together looking at what's on the right side of the screen, right? Cheap IV. The cheap IV side, this is where the cheap stuff is. This is the Walmart rollback of cheap option prices. This is the Kmart blue light special. I know some of you are going to say, what's Kmart? Okay. What's Kmart? This is the Target. Hit the spot, save a lot in option prices. So let me show you what I'm talking about. Notice you got Exxon on here. I see Occidental Petroleum. I see Marathon Oil. I see Halliburton. I see a lot of oil on here. Earl, if you're from Texas, see a lot of Earl. Let's just look at the first Earl, ExxonMobil. Here's why. Take a look at Exxon. The stock price is going up, and it did pull back a little bit, but look what's out of the way. Earnings. The IV. That's the option premiums have gone down. In fact, they've dropped by a third since July 4th. We've seen those prices drop by 1/3. Okay, let's see what else we've got on the cheap side. Lucid is not on the cheap side, and so Lucid's going to be very expensive. That's one I'd be looking at option selling strategies, whether I was bullish, bearish, or maybe don't know. I also see WFC on here. So let's click and take a look at Wells Fargo. Wells Fargo, and it's kind of been oil. It's been all about the oil and all about the banks. If you are looking at old school stocks for the last, really since Labor Day, oil and banks. And so notice what happened here. We got earnings coming out in 63 days. The earnings are far behind us. Look where they were before earnings. You talk about 36. Now down to 26. That's almost a third off when you see that move there. Okay? So where do I get all this information, and how can you get this information? Any of you in the room right now, is there anybody that's new to me right now? All right? New on the Monday Morning Live side, you're watching us for the very first time, or maybe you're new on the YouTube side. If you're on the YouTube side and you're new and you like us, give us a thumbs up, subscribe to the channel. You'll get this stuff as it comes out every day. We do videos weekly there as well. But if you're new on the Monday morning side, and I'm seeing you right now, new, very new. Yes, me. I got something for you. Free admission, no ticket required. Let me show you what I'm talking about, guys. Here's what you got to do. If you have access to an iOS or Android device, this is what it looks like. This is what an Apple iPhone looks like. For the few of you that don't know, you can use an Android phone, you can use an iPad, you can use a Google tablet. All right, go out to the store. That's the Apple Store or the Google Play Store. I want you to download something. Go and Google my Tom's Option Tools. Okay, watch here. Tom's Option Tools. Again, Tom's Option Tools. It's kind of like you sing that song and the little thing goes through. Tom's Option Tools. Go download that or go Google that in the Play Store. You're going to find something there that's an app. That's a suite of apps. Download that. All right. Now, what you're going to do is you're going to come to a point where you have either a login. If you're one of our software users, use your username and password. If you are not a software user, down at the bottom it says, I think it says non-subscriber. That's the dry programmer in us. Non-subscriber login. Click there, follow the rules, log in, and you're going to see this area right here. This is a suite of different apps that we offer to our premium members. But for everybody, I want you to go down to where you see the one called Morning Report. It's got the MR in the little thumbnail or fingernail, whatever they call that thing. Click on that. You click on that, you're going to have access to my cheap and expensive options, along with all of our other things that we discuss. That the report has high volume, high open interest, call volume, put volume. Free gift from me to you. I look at this every single day. We look at it here on Mondays, Tuesdays, and Wednesdays. So today we looked at cheap and expensive IV. Tomorrow I'll be looking at a pair of the other ones as well. And finally, as we get into the last minute or so that I have left, Hey, crypto news. I'm just going to mention this real quick. All right. So, how many of you in the room, whether you're on YouTube or whether you're on Monday Morning Live, how many of you in the room follow me in the world of cryptocurrency? All right. Maybe you follow me on Microcurrency Trader, Fast Fortune Club, one of those two. Guys, keep a very close eye on your inbox today. I got a new coin coming up. Okay. Those of you microcurrency traders, Bitcoin was higher by about look at BTC and Ethereum. They were higher by about 1% to 2% this morning. SEC rejected that Van Eck ETF. I thought that we were going to see a big drop. We didn't. That right there is a huge, huge bullish sign. Huge bullish sign. Okay. So keep that in mind. And of course, at 1 o'clock today, if you're a microcurrency trader, join me in the microcurrency room. We're going to be doing, we're going to look at the watch list. We're going to look at trades. We're going to look at positions and much, much more. So as I sign out and the music begins, I want to thank all of you for joining me today between the 9:30, 10:30 hour. For those of you that are brand new, welcome aboard. This train will be rolling again tomorrow, same time, same channel. Like I said before to our YouTube subscribers, thanks for joining me, guys. I love you. Hey, if you love me, give me a show, give me a thumbs up, and subscribe to the channel. We'd love to have you come back again. I'll see you guys tomorrow. See you this afternoon, those of you that are with me in cryptocurrency, microcurrency traders. I'm out. Bye now.